Welcome back to our Daily Explainer. Today is day 72, and you can feel it in the air. The countdown to the biggest event in Plasm's history is officially on. We are just 6 days away from that massive unlock. And hey, for the first time in what feels like forever, we've got some green on the board.
That's right. After a pretty long and, let's be honest, kind of punishing slide, we finally have some positive price action to talk about.
The price has started to climb back up, finding some footing at around 37 cents.
Now that's a solid 8% jump from yesterday. And while, it's just one day, it is a much-needed signal that the momentum might just be starting to shift.
Okay, let's get right to it. This is the question, isn't it? The one on everyone's mind. Is this just a little dead cat bounce on the way down, or are we actually watching the beginning of a real stabilization?
To even begin to answer that, we have to look past the day-to-day price chart and dive into the core metrics of the protocol itself. And we're going to start with the most important one right now, staking. This is where you see what holders really think.
Get this. Even with all the fear and uncertainty lately, staking just smashed its previous record and hit a new all-time high. A full 67% of the entire Plasm supply is now locked up.
And this isn't some random one-day fluke. Nope. It is the direct continuation of the trend we've been watching all week. As tokens get unlocked each day, what are people doing? They're overwhelmingly choosing to restake them, not dump them on the market. That is a massive vote of confidence.
Now here is where it gets really interesting. This chart tells the whole story of the Plasm supply. You've got 67% staked, 20% in liquidity pools, and another 9% that's been permanently burned. You do the math, that leaves only 4% of the total supply actually liquid and available to be sold. That is an incredibly tiny float, which means even a little bit of buying pressure can make a big difference.
And that tiny float, well, it's about to get even smaller. Because on the other side of the supply coin, you have the tokens being permanently torched by the burn mechanism. In just the last 24 hours, the total amount of burned plasm surged by an incredible 5%. Seriously, that's one of the biggest single-day increases in the burn wallet we have ever seen.
So why the sudden huge jump? It's actually really simple economics. The protocol's buy and burn system uses revenue to buy plasm off the market and destroy it. And when prices are lower, that system becomes a whole lot more powerful. Every single dollar coming from the treasury now removes way more tokens from the supply.
And this just puts it in perfect perspective. At today's price, that burn engine is 157% more efficient at reducing supply than it was back when the price was near $1. The protocol is basically becoming more deflationary at the exact moment it needs it the most. So, while the token price has been on a wild roller coaster, the protocol's core job, its ability to generate real, actual yield, has been unbelievably consistent and strong. This right here is the foundation of the whole thing. The buy and burn USDC pool, which is a key part of how the protocol funds its yield, has now grown for 11 straight days, not one step back.
This is so much more than just a number. It's hard proof of the protocol's resilience. Think about it. This growth has held steady through everything we've seen recently, through the crash, through the little bounces, through the extreme fear, through all the daily unlocks, and now right into this potential recovery. It's a testament to the system's design. So with all these underlying metrics showing some serious signs of strength and stabilization, let's turn our eyes to the massive test that's waiting for us just over the horizon. Here's the roadmap for the final countdown. We've got a couple of smaller release days coming up before things really start to ramp up. But keep a close eye on day 76. That's in just 4 days. It's going to be the first big stress test of our defenses right before the main event. How we handle that day will tell us a lot. And speaking of the main event, at the current price of 37 cents, the total value of that gigantic day 78 unlock is sitting at about $852,000. Now here's the crucial point. While that is still a huge number, the potential sell pressure from this event has dropped by a staggering 61% from its peak when the price was way higher. It's kind of counterintuitive, but the lower price has actually acted as a defense mechanism, making the whole thing so much more manageable for the protocol to handle.
All right, so what's the verdict? What's the big takeaway today? Let's put all these pieces together.
What we're seeing today isn't just some random price bounce in a vacuum. We've got our first green day, yes, but it is being supported by an all-time high in staking, a burn rate that's kicking into high gear, and a yield engine that just won't quit. These are all signs of a healthy, resilient protocol. So at the end of the day, while one green candle certainly doesn't mean the storm is over, the on-chain data is undeniable. The collective choice by holders to keep restaking instead of selling is actively building a much stronger, much more solid foundation for the challenge that's coming on day 78.
And as always, just a quick reminder, this is all for informational and educational purposes. It is not financial advice. Please always do your own research.